We have a new guest in the studio. This is Innovation Week, and a lot is taking place in terms of innovation. We had an innovation conversation at 7 a.m. with the Vice Chancellor of MUST, the Meru University of Science and Technology. We're going to have another conversation about innovation and what you do with your innovation. Okay? Before he comes on, CT has the day's proverb.
Yes, from the country of Sierra Leone. Quarrels end. Words once spoken never die.
Quarrels end. Words once spoken
Never end.
never die or never end.
Never die.
Okay.
Die. Death
Is an end.
signifies an end. Yes.
Okay.
An end doesn't always signify death. But
But
yes,
death most definitely signifies
it's an end.
an end.
Yes, it is.
Kosen Kenta is a program manager at Antler. Good morning, Kosen.
Morning.
Welcome to Kenya's biggest conversation.
Thank you.
Karibu sana to the hot seats.
Happy to be here.
Happy to be here.
Yeah.
That proverb is from Sierra Leone. Any relation? Does it resonate?
Yeah, I think it does. Okay, my understanding is you just need to be careful about what you say. Like once words are out, they're out. And yeah, you just need to be careful.
They will never die.
They will never die.
Yeah. What's that line that they use in Game of Thrones?
What is dead may never die.
That one.
Yeah.
That one. What is dead may never die.
I don't know if it applies, but yeah.
Kosen,
Yeah.
what is Antler?
What is Antler? So Antler is a global tech venture builder and early stage VC. So what we try to do is we enable basically ambitious and most smart and ambitious people to build innovative, disruptive technology businesses at scale.
So what do you do?
What do we do? All right.
So you help them, blah, blah,
So what
blah.
was that like very
What does
Sounds
it do?
like they're the ones that are building.
What have you just said?
All right. So what do we do? Maybe let me try and break that down. We're a venture builder, so we're a startup generator. So basically, what we try to do is help people from day zero, literally build businesses from
For
scratch.
example.
Yeah.
So for example, I have an idea.
Yeah.
Walk me through it. Up to
All
a
right.
point where Antler comes in and helps me.
We come in literally from that point. You have an idea, and the first thing is we think a lot of people place maybe too much value on the idea itself, and not enough value on themselves as individuals and the skill sets they bring. So what you'll come is we'll say you have an idea, you have that entrepreneurial spirit, and yeah, we will now stress test that idea. We will give you the tools you need to further ideate and validate your idea. And yeah, the reality is the business might actually be something really attractive, but on the other hand, it could be something that, yeah, you realize it's not as attractive an opportunity as you thought. And that's why we place more emphasis on the founder, on the individual, because with the right skill set, like don't undervalue your skills you've gathered, the networks you've built, how deep you've gotten into a specific sector, specific vertical. With that knowledge, we think even without the idea from the jump, you're in a really good position to find an exciting problem to fix. Yeah.
So starting from now, the individual.
Yeah.
This person has a brilliant idea. They want to come up with a platform which can better manage the Hustler Fund for SMEs, right?
All right.
And so this is going to be used. It can ride on Safaricom, on Airtel, on Telcom. And so they approach you and they tell you, this is what I'm thinking. I can create something like this.
Yeah.
Now, what is it that they're lacking at this point? And what is it that Antler then gives them?
All right. So several things. So for us, we think, looking at the stats, we have research that's showing that there are three main reasons why startups fail. So number one, it's no market need. So yes, initially you think you have a great idea. The first thing we do is help you with that ideation process. We help you refine your thought process and really figure out how you're going to make this work. And if it's actually, there is a need. So we talk about, you might be looking at a vitamin instead of a painkiller. Yeah. So what we think is when there's actually a really visible and clear pain point, that's when people are willing to pay. So we help with that ideation process. That's the first thing I think, which is really important. Another thing is lack of capital. So yeah, businesses do struggle to get off the ground and just get that ball rolling. And so for us, again, we're willing to actually invest about $80,000 for a small stake of 10% in your business to help you now get moving. Even during the process, it's also difficult during that period when you're actually building you have needs. A lot of these people are coming with experience. You're coming with other needs. You have families, maybe you're a bit older, you have responsibilities, and we'd want to help you through that. So we also assist the founders with a grant during the program. So
Okay. Is there an age limit to this thing?
no, there's no age limit. If
Please carry on.
all right, great, yeah. Looking forward to your application. Yeah. Right. But yeah, so that's another thing. And then another thing is not the right team to fix the problem. So on one hand, we're helping to figure out, are you the right person to fix this? And on the other hand, how the program works is we're bringing several individuals with very different skill sets. And the aim is that people with complementary skills will come together, people with similar visions, and you'll build something amazing from scratch. So that's, I think, a really big value out of Antler. You'll find complementary pieces because you can't do everything. You're going really deep in maybe a specific sector. You have your own skills that you have, but that alone might not be enough to actually push you
move
along.
you.
Yeah.
You know, when you talk about startups, there are all those words that are used, seed fund, I don't know, round one, blah, blah, incubation. Now, many people we hear of, at that point when they're thinking of a business and they want to start that business, they lack that initial capital. And even if they go to their family, so somebody's listening to this idea, out of the benevolence and that responsibility as I have as a family member, I'm going to give you some money. But then I'm just looking at you and thinking, this thing just sounds completely like, why am I giving this person money? Am I going to invest in the money? So there's always that problem with getting that initial capital to actually go and test your idea. Is this where you guys come in?
We do. Of course, we're also not pushing people to start building immediately. So what we think is, what really helps is, can you build a very low fidelity or something very simple? So we call that the minimum viable product. Can you find a way to start validating that there's actually a product, a market need for the product that you're actually building? So yes, we would. First of all, we try and help them confirm or to validate that there's actually a problem they're solving, even before we actually inject the capital. And then it's after you prove that is when, all right, fine, we will help you get started. Because exactly what you're saying, getting from 0 to 1 is actually a really big problem, and getting that injection of capital does help. So yeah.
When somebody then approaches you and needs to then find out how to help with the ideation process, as you call it, do they have to pay you?
No, they don't. As we said, we're actually giving you a grant. We're actually going to almost basically paying you to look for an idea and a problem to solve within that period. Because that's just our mission, is to enable, because we think there are a lot of smart people who are facing certain barriers to actually get their ideas off the ground. And we want to help do that. And again, we're a venture fund, so we will take stakes. So we're also incentivized for you to perform well, because ultimately we do want to exit.
Okay.
Go ahead.
So what kinds of, businesses do you look at? Do you somebody could have a brilliant idea that doesn't fall into the category bins maybe that you have set aside, or is it just anybody who has a great idea and then needs a leg up in terms of assistance, that you would then be able to assist?
So we are, first and foremost, we're sector agnostic. So what that means is we invest in any sector if you can show an opportunity. But maybe the caveat is that it should be tech enabled. So we're looking at either purely technology plays. So think your Facebooks, your maybe enterprise software, maybe purely technology. But then also we're willing to maybe expand our definition of tech companies to those that are leveraging technology heavily. So if you have a lot, like your business might have a lot of physical elements, but it's leveraging technology, we're willing to look at it as well. Yeah, but sector agnostic. Yeah.
So who funds you?
Who funds us? So we have LPs. So first of all, Antler is a global brand. So the Nairobi office is one of 25 locations where Antler is located. And just the same way a venture capital fund would work, we would have partners who would actually inject capital for us to fund. Limited partner. So it's a partner who doesn't actually deal with the day-to-day, but they're actually investing money into the...
So they're
the fund.
investing money.
Exactly.
It's an investment.
It is.
But you're giving me a grant.
Yes. So
And you're giving me money just for 10% stake in an idea which could flop.
yes. So it's to some extent it's a numbers game. So you're right. The earlier we come in, the higher risk it is. Because the fact is, we're literally investing in a person, in an individual.
Yeah.
But that's why we really are very we go through a very rigorous process to actually vet the people we actually invite into the program, because we're betting on you, and it's risky, but we think there are a lot of ambitious and smart people who have the ability to actually build $1 billion company. So again, it's an investment. We're not. It's not just out of the kindness of our, it's not out of the kindness of our heart. It's we want you to have the best opportunity of the biggest leg up to actually be able to get to a point where you can give us a business we can invest in and get a return on it. So we come in at 10%, and yes, that will be diluted, but our thought process is we might have a small stake or a very large company, and that...
Essentially, you want to
benefit to us.
start with someone when they are beginning,
Yes.
in the hope that it will grow to be something much bigger.
Exactly.
So this 10%, which looks like a paltry sum, may actually amount to be something much, much bigger.
Exactly. Yeah.
Is this now not the time for a little success story? Tell us one of these things that you've done, people
it.
whom you have not necessarily mentioned by name, but
Yeah.
venture projects that you've been involved in,
Yeah.
how that went. And of course, if you can throw in a few non-success stories, it will also be good. And why it is they're not successful, and what it is you do when something isn't successful, can you turn it around and make it successful?
Got it. That's a great question. I might not be able to get into, as you said, the specific companies.
Yes,
but yeah.
yes.
So one thing to maybe clarify is, as the Antler East Africa Fund, we are about 3 years old. So keep in mind the horizon for these companies. We're not expecting overnight success. You're not going to become $1 billion company tomorrow, even in a year. It's going to take time. So what I'd say is we're seeing really positive traction for several of our companies. So we've seen our companies, our collective portfolio, raise upwards of $35 million. That's just within a 2-year span. Additionally, just recently we've seen some of our getting into series seed funding rounds so we're giving them the really early stage money just to get off the ground, and we've seen them get a lot of follow-on capital, which is just showing that positive trend that they're actually growing and they're getting buy-in from now actual customers, buy-in from other investors. So yeah, we're not crazy to invest in them. We're finding out people also buying into their vision, and yeah.
And in all companies that you're investing in, it's all the same, 8,000 USD. 80,000 USD.
Yes.
8 million.
No, it varies. So actually, maybe to clarify, we have 2 tracks. So we have the venture building, what we've been describing, which is you come in and we help you build something from scratch.
Okay.
But we also do acceleration. So we're also looking at early stage businesses that we can also inject capital into. So that might vary. So for the venture building, standard, but we have basically a wider for the spectrum of business. So we look at a business on a case-by-case basis. Some of them are coming with their own valuations and saying they're raising X amount, and we decide if we also want to participate in the funding round.
Kosen, for how long have you been in this tech space in Kenya?
Tech space, I'd say maybe the last 3-4 years.
Not as
Not
Antler.
Antler, you.
Kosen.
It's me.
Kosen
Yes.
Kenta.
Got it. Well, funny thing, my background is actually not in tech, it's in legal. So I have practiced previously in basically in the commercial department of a firm in Kenya. So a lot of deals and a lot of basically due diligence and just support to tech startups. But then now I guess I wanted to be more into the thick of things and actually supporting businesses to come up. So moved into management consulting, where again I had the benefit of actually having several projects with some tech startups before now getting into the thick of things with Antler.
The reason I'm asking this
Yeah.
is because of the next question that I'm going to ask, or
Okay.
number of questions. One, this government says it's very big on the digital economy.
Yeah.
In fact, there's an entire state department for digital economy. For a long time, we've been calling ourselves, the Silicon Savannah. This is the place where people with tech ideas and these tech businesses are actually being born.
Yeah.
If you look at the last couple of years, is this digital economy in Kenya actually on the rise? Is it on a decline? Is it on a plateau?
I'd say it's still on the rise, but I'd still say, as you're saying, tying into policy, we do need to be careful that we don't lose that momentum. So for very many reasons, for instance, things like tech talent. About 50% of tech talent on the continent is shared among 5 countries, including Kenya. So we have a lot of labor and a lot of people actually in the space that can work. We're seeing positive trends in terms of VC funding, and Kenya, Nigeria, South Africa is always at the top of that list in terms of injection of VC capital. So, for instance, last year we hit about, basically we've increased, we hit $3.5 billion invested in the space this first half of 2022 in Africa, and that's already about 30% increase from what the same period last year. So we're seeing money still being pumped into the system. But I will say, and we also have things like the CMA sandbox. So we have innovations around government that are helping people to kind of, so for those people who don't know, CMA sandbox helps businesses or tech businesses that are looking in that investment space to kind of build within an environment where they're not really subject to the harsh regulatory landscape.
Framework.
It's like you just kind of experiment with government overseeing it without them really clamping down. So there's some good positives, but then on the other side, we're also seeing some things that might be counterintuitive. So like taxes. Tax has actually been an issue. Digital services tax has been increased, almost doubled to about 3%. From January, also capital gains, which also affects investments in tech, will be increasing significantly. It will be increasing again almost by half. All these things are making it a bit of a harsher environment for people to actually operate in. And now you'll see places like Zanzibar that are trying to now make a lot more really relaxed tax incentives, and we're seeing people moving. So I think Wasoko just moved its headquarters.
So you move actually from Kenya to Zanzibar.
To Zanzibar. And
because there's a better tax regime there.
Exactly. And so those are the things I'm saying. There's a lot of positives. We're still seeing people setting up shop, Microsoft, Amazon, Google. People are still coming into the space. But then there are also things we need to kind of be cognizant about and really look into so that we don't make it harsh and now disincentivize people building here.
Antler essentially is a business.
It is, yes.
Okay, now, for a business to come into, let's call it a space, this space we're referring to as Kenya, there's an opportunity that they must have seen.
Yeah.
There must be something they must have seen. Now, the question that I'd ask, I'm still going back to it.
Yeah.
Success story.
Oh, those were the success stories. I think it's just them making gradual growth, but they're more specific.
No. There's no success story that is complete without stories of
Failure.
No, it isn't failure. It is not achieving what you set out to do. That is not failure.
That's fair.
Because I peppered it by asking, what then do you do? What does one think of doing to rejig it? Because if it hasn't gone the way you purposed it, there must be something that didn't work. What was it that didn't work? And can it be rejigged?
Got it, yeah. I think I understand your question. So yes, even in terms of our investments, because it's, as we said, we're giving several different teams money, but then we understand that not everyone will give us back our return on our investments. The reality is a lot of them do. I'll even go as far as saying some do fail. That's a reality. But it's the fact that we're actually working with you hand in hand, because you're very early stage. You need a bit more hand holding than a more established company would need. There's a point where you outgrow Antler. You'll have access to a lot more advisors, a much larger team, and that's how we help. We support. It's when you're very small, a very small team, you have to find the key roles that you actually need to fit in. That's the reality. So what we'd do is, as advisors, as mentors, as coaches, we're supplementing that. Those gaps in your team when you're very early stage. So that's one thing we'll do. We'll keep holding your hand and keep assessing. So what we have is, even for people we've invested in, we're giving them regular, like weekly check-ins where we're always checking in, even as they're, because you get busy. Running a company is incredibly tedious. These people are, hours and hours on day. So we try and look for times that we can still continue coaching them and just helping them think through the areas that they're actually not figuring out yet. And then also we have the advantage of having a very broad network. So out of these 25 locations, we have over 400 global advisors. So these are domain experts. So people have gotten really deep. About thousands in alumni globally. That these are people, again, you can leverage who have very specific knowledge that they can assist you with to figure things out. But yeah, it's a constant step. And you're right. Sometimes you're not seeing the growth that you anticipated. You're projected you're going to grow by 2x, 3x, all that. You get it. You get your feet hit the ground. You're actually running, and you realize a lot of your hypotheses were wrong, and we kind of help you just figure those things out.
So this model you have where you're actually investing in a person.
Yeah.
So essentially, if something doesn't quite work, would I justifiably then say that you actually misjudged or you misunderstood this particular person? Because somebody can present a capacity that they actually don't have, or they can think they have it. And then when the process actually begins,
it's not the right fit.
It's not quite the right fit.
I get it. No, that's actually why we don't give you money upfront.
Yes.
So applying to Antler doesn't automatically mean you're getting investment.
No.
So, and you're right, because even if our process is a bit rigorous of interviewing and finding the talent, we could get it wrong. We could actually find that these people really were shining in the interview, but when you put them, you actually put them in that context where they actually have to have a lot of grit, dig very deep and go very deep into that specific problem, and they could crumble. And that's why we stay with you for about the program that it's designed, it's about 3 to 4 months. And that means we dedicate a lot of hours. You can't hide behind a very shallow, facade for 3 months. It'll begin to show. Like
your true self will come out.
Exactly, because we'll really. The program is actually pretty intense. It's very rigorous.
And you're constantly in my space.
Exactly, we're constantly asking you to
personal
pitch.
space, man.
There's very little of that. We're constantly pushing you to present on Friday. We're actively tracking your progress. We're coaching you constantly. We're going to get the best out of you, and then ultimately after the 3 months is when we will make the decision of. But then just to clarify, we're very incentivized. We have a target of hitting about 1,000 companies invested in per year. So we really want to invest in as many as possible, but the process is very objective. Yeah.
So far, when you look at what it is that Antler has been doing, do you have an idea, do you have the figures as to how many people have actually applied in the 3 years that you've been in Kenya? How many have applied, and of these numbers, how many have been accepted? Or how many have been accepted to at least begin the process of benefiting from what it is that Antler seeks to do?
Yes, I'm trying to remember the exact figure, but it's
just a roundabout figure. Yeah, if they're around 300, say 4. If they're 1,000, say 2,000, something like that.
It's a few thousands, actually. I think we might be upwards of 10,000 applications over the past 3 years. It's a lot of applications annually. In terms of who we've actually supported, I think we should be upwards of 250 founders supported over the last 3-4 years. Yeah.
Time for a break.
This is the Situation Room, the only way to start your day.
So it's Innovation Week in Kenya, and we are talking about innovation and the role of tech innovators and investors in driving business incubators and investors in driving innovation in the country. We're joined by Kosen Kenta, who is a program manager at Antler, and that's what we've been talking about so far. Kosen, so if you look at this environment and the ecosystem around innovation in this country, several things. Number one, protecting ideas. This is IP and all. Number two, when you have this person, you are a small person with just an idea and big dreams and big ideas. Then this very big company comes. We are present in 30 countries, and we are investing in 100 businesses per year, and we can give you 80,000 USD plus, give you a grant plus we'll be there, and we'll be wanting reports on a daily basis. Basically, they're overwhelming you. And then there's a whole fear of losing your identity and losing that independence that you have. Do you hear that from people in the industry? when it comes to, the money that comes in, whether it's at your stage or whether it's at the stage of venture capital or whether it's a bigger stage of private equity?
I guess it is a fear that you'd move along and now more money coming in and investors are coming in with their expectations and which sometimes are unrealistic. But I think the most important thing is you want to retain your shape and your vision and just the mission as a company. So yeah, I guess you don't want to evolve into something you're not, and that sometimes the pressure. It's investors might actually come in and make you feel like, oh no, you need to scale into all these different countries, you need to start offering all these different services. And I think what we try to do, especially coming in very early, is to make sure you retain your shape and you actually understand where do you have a competitive advantage. So for instance,
that already sounds like controlling. You want to make sure that I retain my shape and I understand where my competitive advantage is.
No, we're trying to set you up for the best.
And you're taking the view that just because you're giving me money, you know better than I do.
You see?
That's we're actually leveraging. That's why we say we're people first. We're leveraging your space. So, for instance, if you guys wanted to start something in the communication
Proverb
space,
space.
or exactly proverb space. You've done so many now on the show. Yeah, we'd be leveraging that. So actually, even for us as the Antler team, it's a very humbling process. You're coming in, you're bringing in a lot of people with very, very impressive CVs and a lot of experience. So yeah, in that sense, we are very cognizant of that. We're trying to actually tap and leverage that. You've gotten very deep into a specific space. You have very sector-specific knowledge you might have. We want to get that out of you. So we're trying to help you make the most of the toolkits you actually have. So we're very much saying we understand your strengths, but as a founder, you also need to understand your weaknesses. And when you're on one track, so if you're just maybe your tech, you know how to build, that in and of itself doesn't mean you'll be able to build a successful startup.
Or even to market.
Exactly.
I'm asking this because there's some trait that I think we have as Kenyans.
Yeah.
We are not comfortable working with others. I don't know whether you've sensed that even in this space. And that's why you see it's very few companies that will go into mergers and acquisition. There are very, very few companies that will start partnering between this company and the other. And even very few individuals who will let others in the family know exactly what kind of business they are running. Because we're very, very protective of this thing that's mine. Now here you are, you have this thing that's yours. And then you have the need to grow and the need to have the support that you require. How do you navigate around that intrinsic characteristic of ours?
Sure. No, that's a real thing. I think from a culture perspective, we want to own everything and have complete control. And I think that's very difficult it's very difficult for you to scale with that mindset. And that's actually a mindset shift that needs to change. There's somebody who used to tell me, a lot of people want to own the whole chicken, as opposed to maybe the leg of a cow. Like something. It's much more valuable. Exactly, and that really limits your ability to grow and scale when you want complete control. So even as you were talking earlier about, I don't want other people to come in. I think you're thinking of it as people coming to exploit you, as opposed to people coming to build you and complement you and supplement what you don't have, because you don't have everything. And if you try to do everything and spread yourself too thin, you'll do nothing. Everything will be operating suboptimally, and it makes more sense just cede a bit of control to create something much larger.
Okay.
Yeah.
So what's Antler doing differently from other angel investors kind of thing? What would be different in this instance for businesses? And then of the businesses that you have been able to help, assist, let's call it that, where are they in terms of a lifeline today? And have they been able to then, or are they on the road to then achieving success when it comes to the initial inputs and then, account management, as it were?
Got it. So your first question in terms of what Antler is doing differently, is right. When you describe accelerators, incubators, a lot of people are coming in at early, but not as early as us. A lot of people are still, you're on your feet wet, you're already in the business, and they're helping you continue to expand that. While Antler was saying, you'll come in here and you might have your ideas, but a lot of people join and they don't even have the ideas. So literally, we're again leveraging your skill set and you as an individual, whereas a lot of people might be wanting to see a bit more proof of concept, a bit more traction, we're saying, with the right people. If they're together, bringing them together. So even that aspect of possibly getting your co-founders, not many other places will give you that kind of pool of people to come into a program with, like-minded individuals and a very large pool of people who you could potentially partner with. And I think that's another thing that we provide that not a lot of other people do. Again, okay, maybe some similar to others is we dedicate a lot of time, one-on-one time with these teams, give them a lot of coaching, even in terms, and also in terms of footprint. So as we described, over 400 advisors globally with 25 locations, all with now their founders as well with their various skill sets. It would be very easy for us to find the additional support you would need to help you progress with your idea. Your next question was tied to, I guess, success stories or how it's going. So again, the horizon is much longer. So we do think a lot of our startups are still on track to actually hit those their milestones and potentially in 7-10 years to actually get to that potential $1 billion valuation and higher.
Okay.
Yeah.
So when do you let go?
I guess it depends. It's really on a case-by-case basis because again, not all founders and teams are the same, and I think that's something we really are very wary of. We don't have, but we try not to be too rigid in terms of how we progress with different people because everyone has different needs. So depending on your level, if we think you don't need as much hand-holding, we'll spread out how much we're actually coaching you and giving you time.
Okay, so perhaps the better question is, do you let go?
We do. At some point, I think we said you outgrow us.
Yes,
you become much larger. Now you're talking about people who are going to help you scale now across Africa, globally.
Yeah.
Again, we're like the start, which means we will give you runway to kind of move along, but your needs will grow and they'll outgrow us, and you'll need larger sums of money to help you continue expanding. These investors are coming in. It's really important also for startups to actually really think about the kind of investors they actually want to partner with. It's what do you need? Do you need somebody who's hands-off? Do you need somebody who's actually going to give you more than the funding and a lot more support? Do you need to leverage their networks? You need to also think through which investors make the most sense for you. And at some point, Antler will still be there to support you if you need it, but your needs might have changed. Yeah, they might have changed, exactly.
One of the things that people have been talking about when it comes to, tech startups in Kenya is looking at the mix between black and white. And the allegation has been, all right, so because this fund wants to go and market itself out there to its investors, as we are supporting tech startups in Africa, in Kenya, which is one of the growing regions in Africa. So you bring in somebody from Europe to come here and partner with Kosen, and it appears like it's Kosen who is a founder, but the co-founder and the actual owner, the person who's actually getting the money, is this Mzungu. And then this thing collapses and they go away with the money. And the word is that Kenya does not actually have proper tech startups that can thrive and survive. You've faced this, I'm sure.
Yeah, no, I won't sugarcoat it. I think there's that sentiment largely that people think with either as a white founder or with a white founder in your team, you might have a better chance of fundraising. That's definitely something we need to also just be wary of, because people should be judged on their merit. To that end, maybe Antler has actually supported, primarily it's 80% of our teams, of the 80% of the people supported actually African nationals. But we're not also, so I think maybe what we also need to put into context is the fact that there are skill sets that maybe could be needed to supplement. So again, for us, we don't say we only support African founders. And, if you look at it, for instance, I don't know if this is controversial, but the fact that there's a lot of brain drain, so many of our talent, even the tech talent, a lot of it is being basically poached and picked for larger multinationals and going into other geographies. And I guess the question is, if we have a few experts coming in also to give their skill sets,
So you call that brain gain?
Yeah, it's like even us, maybe we need to also benefit from the other brains from the other side as well.
I don't think
But,
that the benefit you speak of is what the issue is, really. The issue is one of dominance and an imbalance in the way the gains are spread out. The understanding, it is probably false, but the narrative that is spoken of is one where essentially it boils down to advantage being taken off the locals. That really is at the heart of the narrative.
Yeah.
Now, let me ask a question in relation to that.
Yeah.
I know very little about what you do. I know also very little about that particular space, generally speaking. So, you say what the stake that you go for is, say, 10%.
Yeah.
Okay. This is an industry. Is 10% below the market rate that people take? Is it above? Is it reasonable? What is it?
We pride ourselves in saying at any given time when we do give out our offer, it's the best in the market, considering what we're offering. So, you're right, there's maybe a family and friends around. Your family and friends might not ask. That's definitely better. Maybe they won't ask for.
They won't ask
a
for
stake.
equity.
They might exactly. They might not even give you. So in that sense, or grants.
Relatives have other problems that.
They'll also not give you 80 million.
No, it's not the issue here.
It's true. But you're looking for a better offer in terms of those terms. Yeah, there could be those, but in terms of now, people at the same level, I think we're the best offer in terms of 10%, adding in the fact that all the support that we give, how we walk through your journey from the start. I think it's a very good offer in the market.
Well, I don't know.
It's true, but yeah.
I don't know. So you tell me 10% is good, I'll say, okay, it is good.
You'll have to
15
believe
is good,
me.
then I'll say 15 is
Do you
good.
quantify the other things that you now, the add-ons?
Yeah.
So the time that you spend, the people that you bring to support this startup?
Yeah.
Or are you only looking at the 10%? It's the 80,000 USD that is 10%. What about everything else?
Yeah,
The soft add-ons.
the soft add-on. So I guess that's just
So those ones
value
come
added.
in as value adds.
Exactly. It's just additional things that we give to actually help you.
Now, because you've come to somebody at that point when they are very green, so to
Yeah.
speak. The idea is green and you're trying to also go into proof of concept. Or does it actually meet the need?
Yeah.
Then you also have quite some leverage. It's 10% on paper, but the leverage is actually more than 10%, which means that even the direction that this business takes as it grows, which venture capital to approach, when to actually approach them, when to bring them on board, you have a big say.
So how would I answer that? I think we are advisors, which means we have some level of influence. That goes without saying, the fact that we are using our network. So the point is, we're hoping that we've built that connection and trust. So remember, we're spending a lot of time with these guys. So we're trying to build a relationship with these founders. I think when it's very one-on-one.
Okay.
So I don't think they listen to us because we have 10%. I don't think they listen to us because we're hanging this money over them. We've built a relationship, and where we are all trying to get the best out of this founder. That being said, it also is a decision. There's a conversation that needs to come around.
Yes.
What's the best kind of capital for you? Our horizon is 7 to 10 years. So can you imagine doing something you don't want to do for the next 7 to 10 years? That's why we think you'll fall along the wayside. If we need you to stay there, focused, motivated, we want you to do things that you're actually passionate about. That's, again, why it's a personal decision in terms of what you're actually going to look into, the areas that you want to actually explore. Even we also tell the founders, don't build for Antler. If you build for Antler, you might build something that you actually are not passionate about, that you don't see yourself doing for the next foreseeable 5 to 7 years.
Right.
So it's an important decision. And even for us, we don't want you just building because we said so. Because if you do, we're so early, you won't make it.
You'll just be out.
Exactly.
I'm looking at your profile,
Yeah.
and what you have here is how you say Antler replaces the friends and family round of funding and supports founders through the initial idea generation, team formation, launch, and following seed round. And you come into that very beginning, which is where founders actually begin their journey at that point, idea.
Yeah.
And then as they continue growing, into early stage venture, into later stage venture, into private equity. On this document, there are some organizations that are listed. For example, at early stage venture, you've got Y Combinator, you've got Techstars, and you've got Entrepreneurs Roundtable, Accelerator. You have Founders Fund in the later stage venture, Secure. You have Blackstone, you've got the Carlyle Group and the others. So
Private equity, yeah.
are those linked to you?
No, we're not directly linked. It's, I guess, that infographic is supposed to show you
It's an example.
how early we are. So
Okay.
as against other people, so like against incubators, other later stage venture capital funds, and then all the way to PE. Because again, we're buying you runway, and you will need potentially capital further along. But again, as we said, the ticket sizes you might need more money if you're not expanding into different geographies here. You need more money that we wouldn't be able to support, but we'd be able to get you into the right rooms and the right conversations to people who would.
So you have relationships with this?
So not necessarily. So we have a lot of relationships with other investors, but then, this was just an example.
For example.
The well-known ones that when you think of a PE fund, when you think like Blackstone, when you think of VC. So that's just to show you just how early Antler comes in. We're literally saying from day zero. When
We're there with you.
We'll help you think it through.
At inception.
At inception, yeah.
Okay. What are the reasons why you would not work with someone?
All right, that's a good question. I think one thing is around depth. We want people that are very deep in again, we're leveraging your skill set, so we need people who have actually really gone deep into, and that could look at it could be in different ways. Could be, for instance, if you're in tech and you're like very good at the skills you have, you can go very deep in a very specific space. It could be a domain. You could be like, e-commerce, or just a very specific vertical that you've gone very deep in, and we can leverage that knowledge. In terms of something else that we don't, it's great also because, as we said, we're going to spend a lot of time with you, and we need you to go far deeper than anybody else. Again, you need to have the assumption, you need to have that humility to understand you're not the smartest person in the space, that there are other players also looking into solving some of the problems you're looking into. So you need to go much deeper than anybody else. We need people with a lot of grit. And that becomes evident even as you go through the program and you just go through. I think also people that aren't you need to be a bit open-minded. Because the problem with coming with, so for instance, people do come with ideas or rather solutions. So I know exactly what I want to build. That closes you off. And you start romanticizing what that idea is, and
how it can grow,
I'm going to do this
how
and
successful
this
it can
and
be.
this. Exactly. What you need to be is, first of all, you have to have the humility to understand, to have that potentially, I don't say crash, but just get a reality check with the tools, and you realize, okay, actually this wasn't as great an idea as I thought. Go back to the drawing board and then start again the ideation process. So if you're very close-minded, and maybe also to speak, because I spoke about how people you overvalue that idea, how great it is, and you undervalue your skill set. It's not, you don't also always have to come up with the idea.
With the best idea.
And that's the point, is what happened. You can come into the program and you find there's a friend who has a great idea. So there was an example. There's a fintech that came up, and what happened is somebody had an idea. They didn't have the domain expertise. They come in and then they found somebody with exactly that. And you'd reach out and you say, this is my dream. This is the problem I want to solve for. And you sell that vision, and the person bought into it, and that's how the team was formed.
So they actually came together and became co-founders of this.
Exactly.
So always be open-minded.
Exactly.
Don't just close yourself up and think, all right, because that's the other thing that people will always battle with.
Yeah.
This is my idea. When you guys are trying to shoot it down, it's because you're trying to steal it, and the next thing I'm going to see it out there with somebody else.
Exactly.
Right? At what point do you help somebody to then protect this idea? In terms of registering it, IP and all.
So we help with, I guess, just largely the registration we help with is with registration of the company itself. When you're actually now going to market, we put very little value in ideas. Not very little value, a lot less value in the idea and more in the execution. Even because there probably are multiple people looking to solve the same problem. We believe the biggest thing you can do is actually execute. Execution is actually the most important thing. And two people will not execute in the same way. So again, also we don't personally support it, but we do actually have some partnerships. So for instance, we have a partnership with Bowman's, which actually gives us now office hours and actually offers now support to our startups. So yes, in case you do...
Bowman's Law Firm.
Bowman's Law Firm, yes. So if you do need support, we're able to provide it. But again, we don't want people to get... Because again, it's starting to now being really caught up in just the solution. It's you want to protect it. It's all about the solution. And you've not gotten product market fit. You've not actually shown that this is actually something that will scale. It's the protection, that protection should be the least of your worries at the beginning. The beginning is actually... do I have something worth actually solving for?
That's it.
That's where your focus should be.